Hello everybody, welcome back to another valuation investing video, and today in this video I'm be getting into Nike stock because they have their earnings coming up next Tuesday on September 30th, and I believe that this can be the huge changing point with Nike stock, and I think this could build up some huge momentum in the stock price. So I'm be getting into that upcoming earnings, and going over what I believe is going to happen. Then be using my intrinsic value calculator to get a fair value price for Nike stock to see how much we could make if we bought the stock today. So with that being said, let's get into Nike stock and why I believe that this earnings report will change everything for the future trajectory. Taking a look here at Nike stock, as we can see here, over the past 5 years, it's been a very bad performer, down 44%. While the market's up over 50% over the past 5 years, Nike has really lost a lot of money for investors. If you invested in this time period in the past 5 years, you have not made any money on Nike, unless maybe you bought it here back during the tariff news when Nike really fell a lot because of the huge tariffs on Nike potentially, but that didn't really turn out. So the stock has since rebounded a little bit, but still the stock's down a lot. Right now, Nike's market cap is at $100 billion. So it's really been going down a lot, and a pretty decent dividend yield at 2.3%. So if you're looking for a dividend company, Nike could be a little bit interesting here, especially if we get a bigger dip on earnings. But I actually don't think we're going to get that much of a big dip on earnings. But let's get into that earnings report that's coming up. So as we see here, they're expecting the EPS to be 28 cents per share. This would represent a significant year-over-year decline of approximately 60% compared to 70 cents reported in the same quarter last year. So we're really expecting to see a huge decline in the net income, mainly due to a huge decline in profit margin. Also, we're expected to see revenue forecast of $11 billion, which would indicate a decrease of about 5% from the revenue of the prior year quarter over quarter. So we're expecting pretty bad growth estimates year over year. We're expecting declines in both earnings per share and revenue, but the earnings per share is what's interesting, showing us that the profit margin must be tanking a lot over the past. So that profit margin continues to fall due to a number of reasons. I'm going to be getting into those main reasons coming up soon. But let's get into the key points that I think we should be looking at for this earnings besides the actual numbers. First, I think we need to look at the turnaround strategy for Nike, because Nike has been trying to rebrand kind of and grow this company more over time, and we want to see more product innovation with Nike. As we can see here, we want to have new updates on new high demand products and how they're performing in the marketplace. And as we can see, they're trying to shift focus away from the older, less profitable franchises, and I think that's the main thing here for Nike. They're trying to become more efficient and more profitable, and I think we need to see that happening. Also, we need to take a look at the geographic performance here. We want to see how sales are performing in key regions, especially in China, because this has been pretty weak for Nike, and we want to see a turnaround in that area. Also, wholesale versus direct to consumer. Nike has been re-engaging with its wholesale partners in about 5 years ago. I'm pretty sure they were more direct to consumer. They were trying to be more direct to consumer to increase those profits, but they're trying to get back to wholesalers. So we're going to see how that's going to turn out for Nike. Also, we want to take a look at the gross margin and tariffs. As I said, tariffs has really hit Nike. At least it hasn't been terrible, but tariffs has not been good. As we can see, the new U.S. tariffs on goods from China are estimated to cost Nike a significant amount. Management's ability to mitigate this impact through supply chain shifts and other measures is a key point to watch. So we want to see how Nike responds with these tariffs in the earnings call. We want to see their point of view on how this is going to affect them. Also, we want to see the inventory and discounting. In recent quarters, Nike has dealt with elevated inventory, so they haven't had as much demand compared to their inventory lately. So we're going to be taking a look at how that inventory is changing in this recent earnings. Also, taking a look at the inflation. The company is also facing broader cost inflation across the raw materials. We want to see what they have to say about that. But let's get into the most important thing I personally think with Nike, and I truly do think the most important thing to look at is their competition, and I think it's their biggest problem. As we can see here, Nike has a lot of competitors, and this is the one reason I'm honestly just very concerned about these type of companies. I don't like investing in companies that don't have a great moat, which is a good competitive advantage. And Nike's only moat is their brand. I don't really love buying a company with a moat that's just their brand, because over time that could change, just because maybe because they don't have other things. Just a brand isn't a great moat. Maybe a good moat, like for example, if we took a look at ASML, they have the technology and patents that automatically has them as a moat right now. Compared to a brand can be trendy, so it could potentially change how it is in the future. As we can see here, all these other competitors like Lululemon, for example, about 4 years ago was doing very good, pretty good brand recognition. Now it's starting to do pretty bad because trends just start to change over time. Over time, clothing really trends a lot, so it's hard to tell which is going to be good in the future. Nike has been on a trend ever since basically Michael Jordan signed with Nike. So over the past 30 plus years, Nike has been the top leader. I'm not saying that Nike's not going to be not the top leader anymore, but it is starting to trend a little bit worse for Nike. And I think the main reason is here, these two companies right here. And Deckers Brands and On is two of a very fast growing companies. First, we have Deckers, which is Hoka, which is a direct competitor with Nike. They're growing 20% each year. Also, On right here is another shoe company that is competing with Nike, and they're growing 47%. I think the problem is right now Nike, their industry is getting very diluted with a bunch of athletic brands just keep piling up into this industry. It gets harder for Nike to grow, and it's showing with Nike, especially also combined with the bad macroeconomic environment right now. It's a big problem for Nike. But with that being said, let's get into the financial health of Nike. So taking a look at the 7-step stock analysis, which I've created for Nike, this is actually on my valuation investing stock platform. If you want to get a free trial, just go down in the description, click the Patreon, you get a 7-day free trial, and then it's only $8 per month. That's it. You get 7-step stock analysis. You can look at all the financials of every company. You can use my intrinsic value calculator, and also you can track your own portfolio on here. And I really like this about this platform that I've created. So if you want to just have a 7-day free trial, just go ahead, check it out. You don't have to, but I personally use it and like it. So first, taking a look here, we get 3 out of the 7 key metrics for Nike. The forward P ratio looks pretty decent at 21, so future expectations look decent. The return on invested capital is at 10%, so it's not amazing, not great, not terrible, like I said, but it's still technically an X, but it's basically good enough. The revenue growth isn't good. It's not growing at all over the past 5 years. Earnings per share is actually going down over the past 5 years, so that's not good. However, they are buying back 2% each year, which I like. The debt to free cash flow also looks pretty decent at 3, meaning they can pay off all their debt in 3 years, so that's actually not bad. And the future revenue growth here for analysts is actually negative 12%. Keep in mind that's over the next 1 to 2 years, so it's not taking a look out far ahead. And I think this is not going to be negative for the next 5 years. I still think Nike is going to be growing in the future, but let's go over to the financial statements. Actually, let's go to the financial history charts. Taking a look here, we can see the revenue history. We can see it is going down. The revenue not looking good. Net income also not looking very good right here. The net income going down, profit margins going down, shares outstanding is the only thing that I like about this company. At least they are buying back some shares. So that's the one good thing. But let's go over to the intrinsic value calculator and get a fair value price for Nike. And let's do the bear case. I think over the next 5 years, bear case, this company grows at 3%. I actually think that's going to be what it is for Nike. Base case, I'm actually going to say either 5 or 6%. Let's just do 5.5%. Let's go meet in the middle, 5.5%. Bullish case, I think Nike can grow probably 9% maybe. Let's do 8%. I don't think Nike's going to be a huge grower in the future. Now for the future profit margin, like taking a look here, right here, 6.95% profit margin. So bear case, I actually think it stays right basically where it is today at 7%. Base case, I think it gets to 8.5%. Bullish case gets to 10%. And they've been here in the past, but right now it's just been pretty hard for Nike. Now for the future P ratio, growing 3%. I do think Nike does have a decent moat for the industry they're in, but overall their moat isn't amazing. I think a good PE ratio could be about 14 maybe. Base case, I think we could do, let's just do 18, and then bull case, let's do a 22 PE ratio. Now for the shares outstanding, they've been buying back at about 2%. So bear case, I think they buy back 1%. Base case 2. Bullish case, I think they buy back at 3. Taking a look here, honestly, for the base case, Nike isn't looking too good. Personally, I think for the annual return, you get negative 2%. If you think they only grow 5.5% though, so you got to keep that in mind. And their profit margin remains low. These might be pretty conservative numbers. So bull case could be the base case, honestly, if you truly believe that their profit margin can get back to what it was. So if we go over to where their profit margin was in the past, we can see it was actually at 13%. So let's just do that for the base case. Say it gets back to that profit margin and say they grow 7%. With that being said, honestly, you could get a 10% return. So if you think, if you personally do believe that Nike can get back to their previous profit margins, then it looks like a good time to buy right now. But you have to truly believe that they can get back to where they were in the past with that profit margin and start to grow at about 7-ish%. And you'd get a decent return, honestly. But do I think they're going to get back to that profit margin? I don't necessarily believe so. I just think their pricing power is weakening as more competition is getting to Nike. Me personally, I'm not investing in Nike just because I believe Nike is in an industry I don't love. If I were to buy this company, I would have to get it at a very cheap price. Honestly, if I were to buy Nike, it would have to be in the low 50s. It would be in that 50 range personally. So with that being said, thank you guys for watching this video on Nike. I do believe that this earnings could be decent for Nike though. I think for this earnings, they're going to probably beat on both the top and bottom line barely. And I think the guidance is just going to remain the same. So I think we're going to see a nice pop in the stock, but I don't think we're going to get a huge rally. But with that being said, thank you guys for watching this video. Please subscribe, hit the like button, comment down below, and see ya.